In today's video, we're going to discuss if Cornerstone has fallen to low enough levels to warrant a buy. And also, I'll prove to you why Cornerstone is still one of the best investment vehicles to amass your wealth, even without the drip. As we all know, one of my competitor channels posted a video about Cornerstone last night saying he doesn't like it because he can't drip it at the NAV. So what's the point? Well, I think his strategy is flawed, and I'm going to explain to you why. So we earn over $100,000 per year in dividends at this channel. And my performance and value shows that we're up 39% for the year, okay? We were up 50%, but now we've fallen to about being up about 39%, which is still really good, but S&P is at 15, the Dow's at 5, the Nasdaq's at 29. We definitely don't like to see performance fall, but the market's been pulling back, so I'm okay. However the market goes, so we go. And as long as my dividends of over $100,000 per year remain uninterrupted, then I don't mind whether the market's up or down. The market going up is just icing on the cake. If you need help living financially free out of your brokerage account, email me for my e-guides at aikentodd48@gmail.com. I have e-guides on how to play Cornerstone properly and also how to use margin to live financially free out of your brokerage account. Okay, for every $1 you put in your account, you get $4 of purchasing power, and I just use that to my advantage to buy some of these other yield max funds and some of these higher yielding funds to give me extra performance, extra income. But you have to anchor your portfolio to Cornerstone, in my opinion, because it is the indexes and it gives you the biggest dividend around for an index play. Okay, so Cornerstone, for example, all right, Cornerstone, 500,000 in this fund. All right, why do I have so much in this? It is index and it is 4-star. Okay, if we go to the Morningstar test, you'll see here it's 4 stars and it beats the indexes. Okay, so 17% yield, that's still one of the highest yields you can find around. Okay, even if you're not getting the 21% yield right now dripped at NAV, you're still getting 17%. Where else can you find that? That's also indexed, that also anchors your portfolio from volatility. Okay, because you don't want these other high volatility names like Tesla and Nvidia bringing down your performance. Okay, so Cornerstone is the way that we anchor that. Even without the drip, this is what happens. 30% premiums to year is what you average in Cornerstone per year, okay? And then the rights offering comes. You just have to learn how to time it around the rights offering. So if you're selling out now because you don't get the drip, I feel like your strategy is flawed because, again, you're still getting 17% and then you're getting the 30% premiums to NAV every year. Some years you get 50% premiums, okay? Again, you just have to learn how to time the rights offerings. Most closed-end funds have rights offerings. And so here at Discord, at our chat room where we have hundreds of members already, we talk about the Cornerstone RO here in this channel. I give you the Cornerstone rights offering announcement on this channel, okay? And then we have other channels here in Discord for who offers the best drip programs for Cornerstone, who has the best margin rates, etc., okay? So when you buy my e-guides, all 4 e-guides, you also get free access to my channels on Discord, all the channels on Discord, where I alert you of the rights offering in Cornerstone. And so that's how you really get ahead. And also you get my number when you buy my e-guides. Okay, you get my number, which I think is still much cheaper than what my competitors charge. I think he charges some exorbitant number per hour from what I've heard in times past. I give you everything for $200 one time. So the bundle you buy, all my e-guides, you get Discord access, you get my phone number and all 4 e-guides for $200. That's the bundle price. Pricing will be going up soon, by the way. I've alluded to that in the past, but I haven't had a chance to raise prices yet because I'm still trying to get all of my stars aligned before I raise pricing, because I'm also going to switch formats and go to live videos pretty soon. I just have to figure out the best way to do that. So Cornerstone, even without the drip, once again, guys, that's how you get ahead, is you get the 17% dividend. I didn't use the drip in 2021, okay? I wanted to pay it on my margin much faster. So I didn't, and I should have just used the drip, because then I could have sold the drip shares to pay it on my margin. But I was scared of the drip. I didn't know how it worked. But now I see all you have to do is learn how to ask for the drip. And then for the rights offering, all you have to do is time it properly. So I coach you on both of those things at Discord, and everyone there in Discord can also help you answer whatever questions you may have. And we're all on top of this rights offering together. So Cornerstone, okay, has it reached a low enough level to buy on the charts, okay? CRF, it looks like it still has a little room to fall before we're at ultimate support of $8 or that 100-day moving average there. Okay, we're getting close on CRF. We're almost oversold at 40. If we hit 20, then we're at that oversold level, which is usually when when a buy opportunity sets up. And then if you go look at the sister fund CLM, you'll see that it's pulled back to the 100-day moving average. It's looking almost textbook now. The RSI has almost reached 20. So any more days of pain in this fund, and you should be looking to build a position in Cornerstone. People always ask me, is it time to buy Cornerstone? It's always time to buy Cornerstone unless it's the time of the rights offering, because no matter where you buy this fund, okay, 20% dividend times 5 years, you're paid back in full, okay? So it doesn't matter what the market does, whether it goes up or down. I don't care if I'm up $900 today. All I care about is that I'm down 0.14, which is pretty much in line with the index. So the Nasdaq's down 0.31 and then the SP is up 0.12. So we're in between the SP and the Nasdaq, which is what we want with this margin strategy, with this leverage strategy that we use here to get extra income, to get extra performance. Because how are you going to get ahead in life without taking some form of loan? Okay, so with the loans, with the leverage, you just want to make sure your performance is still relatively muted, and your volatility is muted compared to the indexes, and you still squeeze out and eke out good performance gains, okay? Because again, these performance numbers don't lie. This comes from Cornerstone, and yes, the drip is part of that, but really it's just because I use my margin, and whatever the indexes do, I just do, obviously times 2 or whatever, because because the SP is up 15, I'm up 30, because I'm using the index approach. I'm just using margin on top of the indexes. So some people say, well, when the market falls, now you're going to lose twice as hard, but that's not true, because the 20% dividend in Cornerstone, if we fall 20% in a year, I break even. So that's the advantage to investing with dividends and taking a passive income approach. The dividends pay back all losses. Okay, so that's how I do it with margin. I use the margin. Why not? Why not use this $240,000 in margin that I have here? It's low interest. Okay, it's lower than a credit card, lower than a mortgage, and you can negotiate this interest rate down if you want. I've negotiated down twice. Many of my clients have negotiated their margin rates down to favorable levels. Okay, to make these investments more viable. Okay, and so this is how we're doing it, okay? If the market goes up or down, we don't care. We're just collecting the monthly dividends. As long as these stay going, keep coming uninterrupted, then what's there to worry about? The only thing to worry about is a margin call, so you have to keep your equity number high, okay? The way to keep your equity number high is to concentrate into Cornerstone, because you can afford to put all your money in it. Since it's the index, you can't put all your money in one stock or one sector. You never know what could happen. Okay, you've all learned from my mistakes with pipelines and real estate and energy back in 2020 when I had margin there. Once I tied everything to the indexes, everything changed. And I was buying low maintenance names. The pipeline companies that I was buying, AMSA, the ETF, it was low maintenance and it was tax free. But it was sector specific, and that crashed. Cornerstone is the entire market, so you can afford to put all your money in it and still sleep at night. You have to have both funds, CRF and CLM, because they eliminate concentration risk. If you have all your money in one fund, your maintenance goes up to more than 30%. So you have to keep your maintenance low. This maintenance level here, okay, 30%. For Cornerstone, you have to stay in low maintenance names, because for every 100,000 you invest in Cornerstone, only 30,000 of your equity is taken up in a 30% maintenance name. That's in my e-guide. If you need help understanding the power of maintenance and how to live financially free out of your account, that's in my margin e-guide. You can email me there. So 185, we still have plenty of cushion before a market drop, before a margin call. Okay, 20% correction. I'm still nowhere close to a margin call. And then even if we had that 20% correction, my dividends would just replace my equity. Okay, so that's how you do it. You live financially free through your equity by staying in low maintenance names and also tying your investments to the indexes, which is Cornerstone. Where else can you get 17% from an index play? Again, you just have to learn how to time the rights offering. The rights offering is the only thing that stands in the way of your success in Cornerstone. Okay, you just sit there and hold that 17% yield, drip it at 21%. Even if you can't drip it, you let the premiums of 30% per year accumulate each year in the fund. Okay, because the fund moves up 30% per year. So 30% per year plus on average. Okay, that's on average. In 2021, they had 50% premiums, Cornerstone. So you get the 50% premiums or 30% premiums plus the 21% dividends. So you can get in excess of 50% gains a year, each year in Cornerstone. And then when you sell before that rights offering and buy back after, that's how you reload in your shares and get twice the shares for half the price. Okay, and that's how you just rinse and repeat this every year, and that's all. That information will be in the Cornerstone RO section when the announcement occurs. So I think that will do it for the video, guys, okay? I'm not worried about our performance. We're still outperforming the indexes. I don't even care if I'm up only 5% for the year. As long as I'm making my dividends, that's all I really care about. The performance we're getting is just icing on the cake, and that builds your equity and allows you to withdraw from your equity. So I swipe my E-Trade card out of my account. I can buy cars, clothes, food, travel. I can buy a house with my E-Trade equity. I can do whatever I want, but this equity number has to stay high. Okay, so we get high equity from low maintenance names and from tying our investments to the indexes, okay, and also getting that performance from Cornerstone, that premium to NAV, that 30% premium that builds our equity so we can withdraw from our equity side, our capital gain side, and not our dividend side. So we don't have to sell shares and lose dividends. I just simply withdraw when I want to. Yes, it adds to my debt, but my debt is such low interest. I don't care about adding to the debt. Look at how Elon Musk bought Twitter. He bought that with his margin debt. I don't like staying in cash. Okay? I don't like cash because cash loses to inflation. So I like to stay in debt. I just don't want to have exorbitant debt levels. And I still have almost $1 million of purchasing power that I could use. So I'm just using a fraction of my debt. Everyone has this in their brokerage account. They have this power granted to them. It's up to you to use it responsibly, okay? And the way to use it responsibly, in my opinion, is Cornerstone. But just watch out for the rights offering, which many closed-end funds have. This is nothing abnormal. And just, don't worry about the rights offering, in my opinion, because we alert you of it in Discord. So, okay, if you like the video, click like or subscribe. If you have any questions, leave them in the comment section below. And again, if you need help with any of my strategies, living financially free out of my brokerage account, email me for my e-guides at aikentodd48@gmail.com, and I'll talk to you soon. Thanks.